Over the past 9 years of full-time trading, I have tried a ton of different trading strategies, and it took me about 2 full years to boil down a process to actually become consistently profitable. Looking forward to now, in a single trading session, I can set myself up for $3,000 to $10,000 profits multiple times per day, allowing me to have $50,000 to $100,000 profit per month, like I just documented in the last month. And this isn't done by having an overly complicated strategy or trying to trade a million different things at the same time. This is done by having one simple trading strategy, following a model, and focusing on the right things. So in this video, I'm going to teach you one of my most profitable trading strategy that I have learnt over the past 9 years of my trading journey, so that you'll have a profitable trading strategy that you can understand, practice, and can start using to make consistent profits from the market. But remember, each part of this video is as important as every other part of the video. Important informations have been spread out throughout the whole video, but before we get into all of that, do well to like this video and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into the business. In this strategy, we are going to be combining one of the 2 best trading strategies in the market, the support and resistance, and the order block strategy. Now some of you might think that the support and resistance strategy is the same thing with the order block. Now, although they have some similarities, but they are not the same. The order blocks works more with candles, while the support and resistance works more with zones. If you have been trading for some time now, you will know exactly what I am talking about. But before we go deeper into this strategy, let's first of all understand how the both of these strategies work individually, so you can have full knowledge of them and know exactly what to do when we start combining them together. Support and resistance are those zones or areas where the market has tested many times, and as traders we believe that history always repeats itself, so we are always focused on those areas or zones for the next time that the market will return to test the line and move in our target direction. So we are always looking out for those lines because it has become a genuine area where the market can return to and move in our target direction if traded properly. I definitely won't go deep into teaching you the basics of how to draw the support and resistance perfectly, as I have done that in my previous videos on support and resistance trading strategies, but I'll tell you the 2 basic forms of support and resistance to compensate for the time. Now listen, first we have the base zones, and then we have the flip zones. Now, the base zones are the primary areas of support and resistance in the market, more of the type that you will see a lot of traders teach you on YouTube. Think of it like you are in your room. So basically we have this area where the market will keep hitting a spot and never trading above it. Like a ceiling, resisting it, it keeps bouncing up and never breaking through. So we call that a resistance zone. And then we can also have the market hitting a particular spot and never breaking through, acting like the floor of your room. So we call that a support zone. These 2 areas are called the base zones of support and resistance. But there is another type of support and resistance setup called the flip zones. We have the bearish setup of the flip zones looking like this, and the bullish setup of the flip zone that forms like this. For the bearish flip zone, this is the time that the market finally breaks the floor and then trades below it. And when it has gone below it, the floor now becomes stronger to break, thereby turning the bullish base zone to a bearish flip zone, meaning that the support has now become a resistance. So when the market returns to it, it will hit that zone, which will now become a good selling opportunity. And from there, the market will start falling down. The bullish flip zone is the direct opposite of these. This is when the market finally breaks the ceiling and trade above it. And when it has done that, we imagine that the ceiling has now become stronger to hold the market. So basically it has now converted a bearish base zone to a bullish flip zone, meaning that the resistance area has now become a support area. So the market will return to that area, giving us a great buying opportunity and then rise up and move to our target direction. These flip zones are found in trending markets. Now, order blocks. An order block refers to a price area on the chart where significant buy or sell orders were previously placed by large institutional traders. So basically, they show us the footprints of these large institutions, that their money control the market, and these movements usually forms at supply and demand areas, indicated by one or more candlestick at the supply or demand area. Like the support and resistance, we also have the base order block and the flip order blocks, but for this strategy, we are going to concentrate on the base order blocks, using the same concept like we did with the support and resistance. But now we are going to look at it from the perspective of supply and demand. We identify an order block in these areas by drawing out the last candle before a sharp price movement. So let's take this for example. So here we have a supply zone, but before the market moved down, it left an opposing candlestick here, and after that the market moved down with volatility. So we understand that this candle affected this movement, so the market will have to return to the candle to take some leftover orders and then move the price down with much speed. So basically, we draw out the base order block in two ways. It is either we draw it from the last candle before a rise in the market, or an opposing candle during the price movement. Either ways, all of them must happen at the base zones. So now, let's see how we combine the flip support and resistance zones with the base order blocks to run a successful trading strategy that will make us so much money in the market. And after the strategy, I will be giving you a few guidelines to follow to make sure this strategy works for you. Now this is how it works. A quick illustration before I get into the chart. So we want the market to form a bullish or bearish flip zone, and in this case, we are looking at a bullish flip zone. So we want the market to return to the flip zone, and when it does, the market will form an order block before the market rises up again, making sure it happened at the base zone. And when that has happened, we draw out the other block and wait for the market to return to it. And when it returns to it, we take a trade placing our stop loss below the order block and our take profit target at the next high. That is very simple and very effective on the chart. Now, let's see an example of this on the chart. So here we have a bearish flip zone formed on the chart. So we wait for the market to return to the flip zone. And when it does and starts falling down, we draw out an order block. And in this case, the last candle before the price moved down. And when we draw out the order block, we wait for the market to return to it. And when it does, we will take our trade, placing our stop loss above the order block and now take profit at the next low. And here we have it. The trade was a successful one. Our take profit target got hitted successfully. Now, let's take a look at another example. So here, the market formed a bullish flip zone and it returned to the flip zone, and as it started moving up again, it formed a base order block. So we draw out our order block and then wait for the market to retest it, and when it does, we take our trade placing our stop loss below the order block and our take profit target at the next high. And as you can see, our take profit target was hitted successfully, making this trade a successful long trade. Very simple and very effective. But here are two things you must do if you want this strategy to work for you. Number one, this setup takes time to form. So you must be patient and wait for a complete setup to form before thinking of pressing that buy or sell button. Never rush into your trades, or you might end up blindly trading the wrong setups. Always make sure it happens according to the steps that I have taught you in this course. Rushing into trades is caused by greed or a strong desire for revenge trading. You must avoid those emotions at all cost. The second thing you must do to make this strategy very effective for you is to avoid overtrading. No matter how good a setup is, they are setups that are always better than the rest. Always take high quality setups. Do not take trading setups that are too hard to analyze. If you have to look into a setup multiple times to realize what you are doing, then that setup is not worth your time. There are setups that are always better than the rest. Always take high quality setups. Do not take trading setups that are too hard to analyze. If you have to look into a setup multiple times to realize what you are doing, then that setup is not worth your time. You should leave it and focus on high quality setups. Those are the setup that will bring you profits. Always keep it simple. Do not try too hard to understand it. Flow with what the market gives you. And when the market has not given you anything to work with, keep your fingers crossed and wait for what the market will give to you. And if it is a great setup, you take it and make your money from the market. Stress-free. Now, in this video, I taught you a strategy that really made me so much money in my early days as a trader. In this video, I'll be teaching you a strategy that I currently use to make at least $100,000 in profits every single month. You'll be learning my secret strategy that work efficiently with the new market behaviors. We are the trading tribe, and it's a wrap for this video. See you in the next one.